JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 26th of February 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so I do have a few instruments that I really want to go through today with you guys. So yep, but before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then guys, the first one I want to pick up here is Nikkei 225. And look at this beautiful move here. We've managed to reach the upside support line, the one that I kept talking about from the beginning of this week. And yesterday I said that in a way, if we want to go for some higher levels, we still need that break here, break above the 30,297 territory right here, and a break above this downside line. What, as you can see, the break never happened. Instead, we had a huge decline here. And of course, this is where I was saying also keep your eyes on the European and US equity markets. And yep, that's the result we had here. Yesterday, of course, as you know, US equities sold off, well, I mean, this kind of caused a chain reaction here, and it rolled over into the Asian session as well. So long story short, for now, basically from the technical side, we're now going to keep a close eye on this upside line, because if it continues to provide support, we might see a nice rebound and a push back up. But if it fails, I mean, if we see the daily candle closing somewhere a little bit lower than this 28,966 territory, we can see that the index closed just bang on that level today. But if we see the index falling further south here, then of course my next target is the 27,602 zone right here, or this upside support line drawn from the low of the 19th of March, and then we'll of course take it from there. But for now, everything's looking quite interesting, I would say, but we need that confirmation break if we, or I should say confirmation close rather, because if we don't get that below this here area, then a bit of a rebound here could be possible. Shanghai Composite, also similar story, and as you can see, this is what I talked about. And basically yesterday when I was looking at this, when I was saying that in order to go for some higher levels, well, I need that pushback above the 3,637 territory right here. But as you can see, it never happened. Instead, we started dropping lower. And what I mentioned to you guys as well, that if we drop below this 3,568 territory, roughly around here, marked by yesterday's low, then yes, that's where we'll go for the downside, initially aiming for this upside support line drawn from the low of the 19th of March as well. So, and now basically the big question here is, can this upside line hold? Well, I mean, this similar story with Nikkei. The only thing I would probably suggest here is to wait, guys. Now, wait for next week, well, obviously you need to wait for next week. The market is closed already, but nevertheless, wait for next week. If we start seeing the price climbing back above the 21-day EMA, back above this hurdle right here, the 3,587 territory. Now that's where it could become very interesting for more buyers, so keep that in mind. For the downside, would prefer to maybe wait for a drop somewhere below this key support area, maybe even below the current, well, actually the lowest point of, is that the lowest point of January? Yes, I believe that is the lowest point of January. This one that I'm talking about here, the 3,446 territory, approximately around there, because at the same time, at the same break here, we could get a drop below the 100-day EMA as well, and yep, further declines could be possible here. So keep that in mind, guys. I mean, for now, I'm taking a bit of a neutral stand here because I would like to wait for a break through one of my levels first before kind of considering the next short-term directional move. Jumping into DAX. DAX is a tricky one because on one hand we do have a sliding index, and if we look at the cash index right now, we'll see that the price is well below yesterday's close. Let me just quickly jump into that. So yep, the price is currently trading at around 13,660 mark, and basically we are below this area that I kept talking about, this 13,830 territory. So we managed to get a break below that, and now we're seeing a further decline here, and we are now currently near that 13,660 territory. And to be honest, it's not far from this little level right here, the current lowest point of this week. So yeah, I mean, I think that we are even slightly below that, but let's keep an eye on this one. But basically, if we get a further drop below this area, then yes, my next target is the 13,518 zone right here, or this upside support line, because even though we could see this one drifting further south, we still have a bunch of upside lines that could kind of provide support here, and from where the index could rebound and make its way up again. So one of the overall here upside line here, this overall from the overall picture, this medium-term upside support line is drawn from the low the 19th of March as well. So this could play out, but before that we still have a chance to rebound from this other upside support line drawn from the low of the 11th of December, which also kind of coincides, not well, it doesn't coincide, but is not far from this 100-day EMA. So depending on how this chart will move, I mean, we could see actually the 100-day EMA coinciding with this upside line, which just could add a bit of strength to the whole kind of idea of seeing maybe a possible rebound from this upside line. But for now, long story short, we're keeping an eye on the on this 13,664 territory. A further decline below it, yes, could open the door towards a possible test of this upside line. Jumping into another index, that's the dollar index, and well, I mean, talk about annoying. Yesterday, just to kind of let you know that yesterday I was kind of a little bit more bearish, I would say, on this one, but it was for obvious reasons, because we were trading below this hurdle, below this 89.96 territory. I talked a lot about this, and but this is a perfect example where you guys need to always wait for that daily close, because as you can see, we were drifting lower. We were nicely below this 89.96 territory, but by the end of the day, it kind of reversed back to the upside, and well, ended up closing above this area, above this 89.96. This daily candle ended up staying above this area, and that's the result right now that we are seeing. We're seeing a further push north, a test of the 21-day EMA, and we're very close to this downside line drawn from the high of the 5th of February. Now, the big question here is, can we push further north? Of course, given that we have way too many obstacles here on the upside, I'll be very careful with that idea, with the upside idea, because first of all, we need to see a break of this downside line. If we get that, yes, we could start looking at some higher levels. We could go for this 91.05 territory I spoke about a lot, and and if that surrenders, now that's where we could get a little bit more excited with higher levels, and then yes, we could go for a further move here towards the this 91.75 territory, or even above that. But again, like I said, a lot of clearances have to be made first before we could get a little bit more excited with the upside. For now, I'm taking slightly neutral side here, because again, even for the downside, I do understand that we are still below this downside line, and kind of it shows that the trend is still to the downside. Yes, but for me, I still like this level here, this 89.96, and I'm still keeping an eye on it. And if I get that break here below this area, now that's, like I said, that's where I'm gonna start looking at the downside again. Jumping into gold, and gold, of course, is not really liking the stronger dollar. And yesterday, after dollar index reversed to the upside, gold took a massive hit and drifted lower. And this is what I was talking about yesterday when I was covering gold, guys. So what I was saying, that if this hurdle right here, this 1785, provides good support, then we might see a nice rebound and maybe a push back to the upside. But if this surrenders, if this gets broken, and then we could start aiming for that lowest point of November of last year, which is roughly around the 1760 mark, or 1765 mark, or we could go for that current lowest point, or should I say previous lowest point of February, near the 1760 territory. And today, as you can see, we are already kind of breaking that area. So this, of course, is kind of increasing the chances for this commodity to drift further south. And from the technical side, if we look at this basically from the perspective of a possible kind of descending triangle here, then we can see that the floor right now is getting broken, and this way kind of the commodity is kind of confirming now a forthcoming lower low, and it seems that it wants to drift further south. Now, if we also take a look at the weekly chart, guys, I mean, that's not really looking very awesome as well. I mean, for the bulls, because as you can see, the same story here. We're having even a much clearer picture, I would say, because we can see here the clear, nice move to the downside while trading below this downside line drawn from the high of the 3rd of August. And now we're kind of confirming a forthcoming lower low. So to be honest, I mean, this picture doesn't look very positive, and well, I mean, it increases the chances for a further move lower. My next target is the 1704 territory right here, not far from that psychological 1700 level. Slightly below that, we do have this little obstacle. And the reason why I'm taking it from here, because although yes, we had a bit of a violation of this level here, this 1681 zone, still this kind of level coincides with the 100-day EMA, and to be honest, it could even approach it a little bit closer later on. So yep, I mean, a lot of things are leaning towards the downside, guys. And looking at this picture, I mean, it's not really looking good. Now, of course, some of you probably could draw an upside support line here now, but the only problem here is that all of them are going to be very tentative. So either you draw it from here and capture these two lows, or you draw it from here basically and capture these two lows. Nevertheless, the objective remains the same, the target remains the same, that we could see a test of this area right here. So basically, long story short, I'm a kind of a believer that we might see further declines. And what I would suggest here, keep your eyes on the weekly candle today, because if this stays today, if this weekly candle closes below this area, below this 1760 territory, that's where it could become very interesting. And we could see further declines going into upcoming weeks. Now, jumping into the WTI oil. I'll stick to the weekly candle or weekly chart for now, because although we're seeing a bit of a decline right now this morning, as you can see, we're still above last week's high, which is roughly around the 62.25 territory. So although, like I said, we're seeing a bit of a corrective move here lower, if the price today stays above this the previous week's high, then there is a better chance that, greater chance that we could see this one pushing back up here, pushing back towards the highest point of January, or in other words, the highest point of 2020. And yep, and then and that level is around the 65.62 mark. But if it drifts back below this and stays below this area, below the 62.25, then maybe we could, going into next week, we could see maybe a bit of a corrective move lower. Now you can see that yesterday we formed a potential doji here, but to be honest, I'm kind of skipping these candle formations here for the WTI oil, because again, look at this. I mean, this here, for example, we had a doji here, we had a doji here. I mean, and yeah, now we're just kind of it seems that it's sometimes just ignoring those, so that's why I'm going to ignore it as well. And mainly I'm going to stick to some support and resistance levels, and for me right now the main focus is on the 62.25 zone. Bitcoin, so I'm not going to spend too much time on this, because again, what I can say is here is that this idea kind of worked out. So we pushed higher, we had a bit of a retracement here, we had the 50, we actually found kind of resistance in between the 50 and the 61.8% retracement of the Fibonacci, and now we're seeing a drift lower. So I'll get rid of this Fibonacci, no longer needed. But the most important thing is right now is that we are breaking this upside line and we are falling further. The big question here is, can we overcome the current lowest point of this week, and that's roughly around the 45 mark. Yep, if I'm not mistaken, 45,000 mark. So that's my main level right now. If we get a drop below this, then yes, further declines are possible, guys, and we could start maybe looking at this upside line drawn from the low of the 11th of December. Ethereum, guys, and yep, this one is on a slide as well. I mean, it failed to get back above this upside line, and this is what I was mentioning previously, that if it struggles to get back above this upside line, then yep, another slide here could be possible. So far, I mean, everything's kind of leading towards that, and well, I mean, for now, I'm gonna stick to the downside as well, and I'm gonna continue aiming for lower levels. My next target is the this area right here, the 1200, so 1206 territory, marked by the low of the 27th of January, which also coincides with the 100-day EMA here on the daily chart. Litecoin, so Litecoin is also quite interesting. Now here, basically, as you can see, this idea worked out perfectly. I mean, I talked a lot about this, and basically what I said, that if the 185.75 area continues to provide resistance, if we don't see that daily candle staying above this, then yep, another slide here could be possible. And boom, we're having this slide right now. We're testing this 165.26 territory. Okay, great news. Now can we move to this upside line here, drawn from the low of the 11th of December? Well, to be honest, that's what I'm going to be targeting right now, and as long as it stays below the 185.75 territory, I'm going to continue targeting this upside line, and then we'll take it from there. AUDNZD quick update. So yesterday I talked about this pair, and yep, I said that, or actually not only yesterday, I also talked about this pair in the beginning of this week as well, because this was quite interesting to see what it's going to do here. And basically, initially the idea was that if it holds, if this 1.0718 territory holds, then we could see a nice rebound and a push back up. But what I said then, that if it breaks that area, all this area in between will be somewhat of in between the 21-day EMA and the 200-day EMA will be somewhat of a neutral one for me. But if it falls below the 1.0673, now that's where it could become very interesting for more sellers. And for now, to be honest, looking at this picture, I'm kind of leaning a little bit more towards the downside. The only little issue, there's this little obstacle on the way. Let me just mark this one very quickly. So this one right here, and that's actually let me just capture this one. There we go. This one right here near the 1.0630 mark, and initially the rate could get a hold up here. Maybe we could see even a rebound, but to be honest, for now I'm gonna, as long as the pair trades below the 200-day EMA, I'm going to continue targeting the downside. USD JPY very quickly. So again, still flirting with this 106.10 zone, 10-11 zone. we did get a push and a good push higher, but for now, to be honest, I will probably leave it until next week because at the moment it's very tricky. It's just nowhere. I mean, there's a rising dollar which is kind of taking the center stage right now, but also equity markets are shifting back down. So yen buying. Some people are jumping into yen as a safe haven. So there is a bit of a trickiness here, I would say, with this pair. So that's why probably I would like to see how this weekly candle is going to end and where it's going to end. Because if it stays above this area today, then above this 106.11, then yep, I'll continue targeting the upside. If it doesn't, maybe we'll get a bit of a corrective move lower. GBPCHF. Now, this one is an interesting one, and look at this beautiful move here. Now, but I don't want to really spend too much time on the daily chart, but I just want to recap what I said on around the weekly one. And basically, if you remember, when I was covering GBPCHF, I said, guys, wait for, keep an eye on this 200-day EMA and wait for it, because let's see how this weekly candle is going to end up shaping up, because basically this 200-day EMA is kind of providing somehow good resistance. And yes, we had a strong push higher. We look at this beautiful explosion here to the upside, but now we've traveled back below the 200-day EMA. So this means that maybe, just maybe, we could see some corrective moves here going into next week. So keep that in mind. But again, let's keep an eye on the weekly candle here and where it's going to end in relation to the 200-day EMA. But to be honest, probably the main focus will be on the next week's weekly candle here, because even if it stays above this 200-day EMA today, look at this history here, for example, where we saw the weekly candle staying above the 200-day EMA, but then the next one was reversing sharply back to the downside. So yep, let's see if something like this will happen again. But again, don't rush into anything. If you're not comfortable right now, I'm not really suggesting to go short here, because again, it could retrace back up here at some point. But yeah, be very careful, guys. Keep your eyes on the weekly candle, and let's see what we can do with this one going into next week. EURGBP, very quickly on this one, and yep, beautiful move. So yeah, everything's working out nicely. I've talked about this pair yesterday, and basically I said to you guys, wait for this was my call yesterday, that if we get a pop above the 0.8616 territory, yep, we could go and test this downside line, which we did, and today we're seeing a break of this downside line and a further move higher. So the big question here is right now, will we stay above this downside line? Now, because what I don't want to see here is just basically this daily candle reversing back down and falling below it today, and kind of this way the pair would confirm just a false breakout, especially on the weekly candle, and then yep, we could see this one drifting back down again. So let's keep an eye on this one. Let's stay safe. I would probably suggest to leave it for today and just observe it, and then we can try to squeeze something out of it going into next week. And finally, EURUSD. So this one is a mess, and basically, yep, I will say that, I mean, it didn't really work out as planned. I mean, it did get a push higher, but what I said to you guys yesterday, that if we see the rate staying above the 1.2210 territory right here, then yes, I will get a little bit more excited with the upside, but we didn't get that. Instead, we had a strong reversal back down, and to be honest, we're now seeing a fall back below this hurdle, below this neckline of the potential inverted head and shoulders pattern. But to be honest, I think that we'll have to skip the idea of an inverted head and shoulders pattern, and we'll just have to keep an eye on some other things here. So the idea of the inverted head and shoulders didn't really work out. What I'm going to stick to right now is just purely this upside support line drawn from the low of the 5th of February. And even if we see a drift lower here, if the rate remains above above this upside line, then yes, there is still a chance for the bulls to step in. But if it doesn't, I mean, well, this could roll over here, and we could see further declines. Of course, still my more comfortable level for the downside is on a break of this area here, the 1.2023 zone. But let's wait and see. Let's see how this is going to play out. For now, I'm cautiously bullish on this one because there is still a chance for the bulls to step in on this near this upside line, and then we'll take it from there, guys. So that's why be very careful with the euro dollar, and it might drift a little bit back down here. Well, at least towards the 21-day EMA, we could see that move, and then we'll take it from there. So, guys, yeah, I hope you found it useful. Thank you very much for watching and listening. Just a quick update that today we're not going to have any traders tea time. So, yep, we'll resume on Monday with my traders espresso, as always, 7 o'clock GMT time, guys. So have a wonderful weekend. Have a wonderful trading day today. And yes, of course, like I said, be careful, guys. Have your stop losses in place, and well, everything will be fine then. Yeah, have a wonderful time, guys. Bye-bye.